first. My name is Siti Nurdanisha binti Anwar and my matric card numbers is 0480 22F1049.
My name is Eunice Wali, daughter of Ibn Seren. My matric number 04D8022F1996.
My name is Nur Anissa binti Maknabi. My matric number 04D8022F1016.
My name is Naliana Shazwani binti Aishadi. My matric number 04D8022F1046.
Hello guys, today the topic of my presentation about definition of cost accounting. Cost accounting is the establishment of budget, standard cost and actual cost of operation, process activities of product and the analysis of variance, profitability of the social use of fund, CIMA London. Cost accounting is quantitative method that accumulated, classify, summarize and integrate information for three major purposes. First, operational planning and controlling. Second, special decision. And thirdly, product decision. Charles T. Honzen.
Okay, the next I would explain to you guys the importance of cost accounting. Okay, you guys know the importance of cost accounting?
No.
Let me explain to you guys, okay?
Okay.
Cost accounting has many advantages. Here are some of the way it can help a business, okay? Okay, the first important is controlling cost. Okay, cost accounting helps the management for us the cost, price and selling price of a product or a service, which helps them formulate business policy with cost value as a reference. The management can come up with techniques to control cost with an aim to achieve maximum profitability. Okay, the second important is determining the total per unit cost. Okay, cost accounting technique help in determining the total per unit cost of a product or a service, so that the business can fit the selling price for it. Okay, understand?
Understand.
Okay, for the third important is showing profitable and non-profitable activities. This information helps the management put an end to non-profitable activity while developing and expanding the profitable ones. Okay, last but not least, for the importance of cost accounting is comparing costs over time. Okay. The data in the cost sheet prepared for various time periods helps in comparing the cost for the same product or a service over a period of time. You guys have any question?
Madam, can you explain more apart from what are four important of cost accounting?
Other than for important of costing accounting, if you guys to know providing information for short-term and long-term decision making, is one of the important you need to know. Okay, decision making can be divided into short-term decision making and long-term decision making. Routine operating decision, also known as tactical decision, have a short-term implication. This decision aim to improve short-term profitability. Okay, some example are as follow: is make or buy a particular component. Okay, but then whether to outsource a particular job, price for special order, the most profitable product mix, last profit at different level of production. Got it?
Got it.
Okay. Meanwhile, long-term decision making is also known as strategic planning, and it has long-term implication. Okay. Some examples are as follow. The first is pricing of new product. Okay. Second, development of new product. Third, development of new markets. Fourth, dropping existing product. Last but not least, for long-term decision making is dropping existing market. Okay. To help the management of a company make to appropriate selection, the cost accountant provides information about how future revenue or cost will differ under each alternatives option. This information is very important to assist management in the decision making process. You got it?
Yes.
Do you understand?
Yes.
Any question?
No.
That's all for me. Thank you.
Next, I will talk about different cost accounting and financial accounting. For those who do not understand, just raise your hand and ask me, right?
Okay.
Definition of cost accounting. The classification, recording, presentation, and interpretation of costs involved in the manufacturing and selling of each product and services. 1. Financial accounting, the analysis, classification, and recording of financial transactions and the ascertainment of how such transaction affects the performance and financial position of the business. Objective cost accounting. To ascertain and control cost and maximize efficiency. The main purpose is to provide cost information to the management. Financial accounting objective. The main purpose is to prepare a profit and loss account and balance sheet for reporting to outside parties. Focus user for cost accounting. Focus on the reporting to internal user. While focus user for financial accounting focus on reporting to external user of accounting information. Time dimension. Focus on present and future data for cost accounting. Report on what happened in the past to draw up financial statement. Historical data for financial accounting. Format for cost accounting. No specific format for cost accounting reports. They are prepared in the format decided internally by the firm in the format which most the users. The financial statements are prepared in the format prescribed by regulatory bodies. Report frequency for cost accounting data and statements are prepared whenever need. Financial statements are prepared for a definite period of time for financial costing.
What is the record frequency of cost accounting and financial account?
Record frequency for cost account, for example, monthly, weekly, or daily. While financial accounting of the time usually by year. Got it? Yes. Accounting method is not based on the double entry system. For financial accounting, follow the double entry system. Segmentation of cost accounting report focus on small part of the organization such as customer, service, and activities. Financial accounting report describe the whole of the business. Unit of measurement may apply monetary or non-monetary unit of measurement for cost accounting. It provides information in terms of monetary unit only for financial accounting. Yes.
What is the difference about unit of measurement between cost accounting and also financial accounting?
For cost accounting, machine hours or labor hours. For financial accounting, ringgit Malaysia. Okay. Report. Report for cost accounting. Generate special report and analysis of required by management. For example, sales report, cash budget, and variance analysis. For financial accounting, generate financial statement, income statement, and balance sheet, cash flow statement, fund flow statement, and financial statement analysis, such as ratio analysis. All for me. Thank you, guys.
Today, I would like to present about product cost, period cost, variable cost, fixed cost, and semi-variable cost. So, what is product cost? Product cost, which include in-stock valuation, are the costs identified with goods produced or purchased for resale. Period costs are those costs which are not included for stock valuation purpose. For a trading company, product costs are the costs identified with goods purchased for resale. All other costs such as selling and distribution and administration expenses are treated as period costs. So second is, what is fixed cost? Fixed costs are those costs which remain unchanged regardless of the level of activity or the outcome of a decision under consideration. For example, of fixed costs include supervisor salaries, factory rent, depreciation of plant and machinery, and equipment leasing charge. So these are the example of the graph of total fixed cost. Vertical will be total fixed cost and horizontal will be number of units produced. Second is variable costs. Variable costs are costs that vary with production output. In the short term, variable costs charge in direct proportion to the level of production output. This means that total variable costs increase when additional units are produced and decrease when fewer units are produced. So this is the example of the graph total variable cost. Horizontal will be numbers of units produced and vertical will be total variable cost. Total variable cost increase when the additional numbers of units produced. Lastly is semi-variable cost. Semi-variable cost is there are costs that contain both of combination of variable cost and fixed cost. For instance, telephone costs contain a fixed sum as rental for a period, say 1 month, and variable cost for meter calls. So you guys can see at the page 40 at the book cost and management accounting for the diagram. Thank you.
Okay guys, today I am going to explain about controllable and non-controllable costs. Controllable costs are costs that can be imposed or regulated by the manager or as responsible for it. For example, direct material, direct labor and certain factory overhead costs are controlled by the production manager. Second example is the sales manager as controller over the salary and commission for sales personnel. The second one is non-controllable costs. Non-controllable costs are those that are not under the control of the specific managers. They cannot be influenced by the decision or action of the manager. These costs are imposed by the top manager or allocated to several departments. For example, a company-wide advertising cost that is allocated by the central office to different departments is not under the control of the department head. The second one is including depreciation, insurance, share in rent, share in organization-wide security costs, and etc. The third one is prepaid statement of cost. The cost statement is prepared usually to present the detailed cost of total output during the certain period. The second one is it provides information relating to cost per unit at different stages of the total cost of production or at a different stage of incomplete of the product. You guys can see the example of format at page 24. In direct material, we have opening stock, add with purchase of raw material and carriage inward. We want to less with close stock of raw material, we will get cost of raw material consumed. After that, we want to add with direct labor, that is direct expenses, direct wages and royalty. After we add with that, we will get prime cost. After that, we want to add with manufacturing overhead, that is indirect material, indirect wages, depreciation of machine, depreciation of factory building, rent and rate of the factory. After we add with prime cost, we will get manufacturing cost. After that, we want to add and less with work in process, opening and closing. And then we will get cost of good manufacturing. The fourth one is administration overhead. That is a manager salary, clerk salary, stationery, depreciation of office building, depreciation of photocopy machine. The fifth one is selling and distribution overhead. That is a sales expenses, promotion, depreciation of finishing goods delivery. After we add with cost of good manufacturing, administration overhead and selling and distribution overhead, we will get total cost. For income statement, we add with total cost with finishing good opening less with finishing good closing, we will get good cost of goods sold. After that, we want to less with sell, we will get profit or loss for this business. This only from us. Thank you.
Habis.